Welcome back to our channel, Investor. We're going to be talking about a topic that everyone loves. Property taxes. We love paying them, right? No, I'm thinking a question, and it's interesting. It's in New Mexico. So I don't know New Mexico very well, but property tax in multiple states work very similarly from an assessment. It's not actual state, but it's the county that does a lot of the assessment pursuant to it. So let me just read it quickly. Property tax went up 450% in 1 year after purchase for a commercial property. This person need to fight the property taxes. They bought it in 2023. Half the price with the city or the assessor or the county assessor is doing. They're saying that it went up 450% from the previous seller's basis. New Mexico is a non-disclosure state. Broker advised us not to disclose the sales price. It was an off-market sale. We called the city to protest. In response, the city gave us a huge list of 30-plus items to provide with just 1 week deadline. Half of these items even a lender would not request. Some of these include number of units, occupied of each unit, studies utilized to determine market adjustment, date of the last time a subject or comparable properties were physically visited and reviewed by protestant, along with documents of such visit. Detailed rent roll. Man, welcome to commercial real estate, guys. A lot of people want to be landlords, but they just feel like, oh, being a landlord or investor is so good. Like, why do you want to be a commercial real estate owner? I want to be a landlord. Yeah, it sounds good, but there's a lot of things you need to know, and there's a lot of headache that comes with it. So property tax is a very unique aspect of any investments, especially real estate, because that's one of the largest component of your expenses. So this individual saying the property tax went up 450%, it's kind of clickbait because to what? 400% of the previous seller's basis, right? I know Texas is a non-disclosure state. New Mexico now files a non-disclosure state. In California and New York, they're a disclosure state. I think Chicago, like Illinois as well too. So I'll first talk about what a disclosure state is. So in California, if I bought a house and let's say someone lived in the house for 25 years and they bought it at $200,000. Fast forward 25 years, let's say I bought it for $1 million. Then the assessor, everyone will know as a public record that I pay $1 million. So then it's easy. They're going to say, well, you owe us, this much money because we're going to charge you on $1 million, 1.12%, 1.3%. Non-disclosure state is that they don't know what you pay for, okay? It could be off-market, not listed. You don't have to disclose to any public record what you pay for that asset. So when this individual is talking about 450% increases from the prior owner's basis, and we don't know if the prior owner owned that property for 30 years, and their basis like $50,000, and you bought it for, let's say, $400,000. So when the government knows that you have a new owner, they're going to say, well, we don't know how much you paid for, but we have an assessment department, we have our appraisers, and we believe that property is worth $1 million, right? And they're going to charge you property tax on $1 million, even though you pay $450,000. So that's why you have a crazy property tax bill. You should have known that. This may be your first commercial real estate. I don't know about New Mexico, but in Texas, they can assess up to 8% increase a year without justification. I don't know what that means. Without justification, it goes up by 8%. Anything more than that, they have to justify it. So I'm going to use Texas because I have a lot more experience in Texas versus New Mexico, but they work very similar. So if you bought a property, there's a mill rate, there's a tax rate, they have a certain calculation. So based on your purchase price, you're calculating all that, but the assessors don't know. So if you bought the property at $10 million, well, the assessors thinks this property is worth 15, so they're going to charge me their mill rate on 15 million. So we're going to have a bigger property tax liability than what we underwrote. So you have to appeal it. So most assessors, they have the initial appeal. I think, I'm not sure about New Mexico, but you can appeal it once. You can go and say, hey, we disagree with it. Can you take a look at it and reassess it? And they'll come back and say, oh, your appeal is denied. But most of the time, they'll say, well, we'll lower it. I'm using your 450 as an example. We assess 450, but we'll reduce it down to 400%. And to you, you're like, what the hell? That's still 400%. So you're going to get upset. So you're going to make a formal appeal. And that formal appeal is going to ask you to provide all the necessary information to justify that is lower basis. And usually in those states, non-disclosure state, they're going to just say, well, show us your closing statement. Then we'll know how much you pay for it, and we can do that. But you don't want to never do that, because what if you can get it lower than that, right? So you don't want to disclose and show your hand. It's never prudent to show your hand. You should always have that in the back pocket. So then you have to go argue and say, well, can we use something called a uniform assessment rule? And I think each state has that. So what that means is, if I have a comparable asset or property that you purchase, and the next door neighbor, or, similar caliber assets that was held by, certain owners for like 5 years, let's say they got an 8% increase from their basis. You're going to make that argument saying that's discriminatory and it's egregiously high. We like to have a same and uniform assessment as comparable buildings. In order to do that, you have to appeal. And those kind of gets a little bit more technical. So I don't know how much the property taxes is and whatnot, but there are attorneys and consultants who does property tax in every state. So you should be able to find that. So you should Google property tax appeal consultants or whatnot. Certain states, you have to be a legal, licensed lawyer to make appeals. Certain states, anyone can make an appeal. You can make an appeal yourself, but it's very cumbersome because it's very technical. So why they want to know how many units? It's because they want you to provide much information as possible so that they can lower it, and they know they're going to meet you in the middle somewhere, but they still want to charge you the highest as possible. So if you tell them there's 10 units and you say, hey, these 10 units are occupied, this is how much rent they pay, and this is how much I pay, and operating expenses and physical inspection, right? So is it in good shape, bad shape? You have to tell them that. And then they're going to use all that and say, well, we assess this property is not worth $1 million, but it's worth $850,000 based on the information you give us. So we're going to assess you this much. So when you do that, how are you going to appeal that? So usually what you want to do is get a consultant to argue, and those information they will get, and they will do their own fair market value analysis and present third-party appraisal, third-party engineering to show and appeal that case. So that's how you need to do it. It's unfortunate, but that's the reality of real estate ownership. New Mexico, Colorado, California, look, every government agency with income tax, without income tax, we call it blue or red, they all want more money from you. That's how they generate money. By what? Taxing you. So of course they're going to try to get the taxes as high as possible. And they make it's you that you need to go argue why you should be lower. So they put the burden of proof on you, because they'll just say, well, we think it's worth $1 million, regardless of what you pay for. And it's your job to go argue that case. And, some people like that because I like arguing, so I love to go argue. California, I'm shit out of luck. I mean, it discloses whatever you pay for, and there you go. So even though our property tax rates are low, very low compared to the national average, but because property inflation in California is a full disclosure state, the government knows what you pay for, and just really hard to go around appealing that. So a lot of the appeals are going to be in other states that's mostly non-disclosure state. I know that's very broad. It might not be as specific as you want, but I mean, that's the best I can do without knowing all the facts. If it's a big amount, I think you really need to get an attorney or consultant who really does this appeal. And one thing they do is they don't charge you anything. They're like the ambulance chaser, right? Like, you don't have to pay anything. We'll just take a cut from what we save you. So that's how they make the money. So initially, you might have to put in like a couple $100 as a retainer, and they will always contract it saying, we will take 30% of the savings. So as an example, if they saved you $1,000, they'll take $300 as their fee. Okay. The range is about 20 to 30% is the range, is what those consultants would charge you. So just kind of know about that. If it goes higher than 30%, I don't know. That's a little too high. 30 is on the high side. 15 to 20 is very reasonable. If you found this content helpful, please like, subscribe, add comments, and please share. Thank you very much.